Have you ever thought about a mortgage refinance? Some of you have asked that question, and yesterday I had somebody send me a question, and they said, is it ever a good idea to do a mortgage refinance, and when would that be? So I thought I'd hop on here just for a couple of minutes and give you a few scenarios. If you remember previously, we talked about the first 7 years is when you pay a bulk sum of all of your interest. They front load that interest, the banks and the mortgage companies do, because they know typically people will get rid of their house in 7 years or less. That's just kind of an average that they have kind of figured out. So they want to front load all that interest. So that means that you're paying a ton of interest on that mortgage in the first 7 years. So think about that. If you're going to refinance, you need somebody who's smart and can run the numbers. These are just some generalizations that I just want to let you know. Typically what I've seen when I've run some numbers has been, if you can save over 1% and you've got quite a bit left on your mortgage, that means way more than half, then it might make sense for you financially that you could save more in the long run to do that. Because when you refinance your mortgage, there's going to be fees and expenses with doing that. And what that does is it restarts the timer on your interest for that first 7 years of high, when you're doing your payment. You know, the majority of your payment in that first 7 years is going towards your interest and not your principal. So this is a big reason why so many people still, they'll refinance to try and take care of some of that debt, use the equity, and yet they still owe it almost as much on their principal as they did when they started their loan. So it ends up being kind of again, it's that hamster wheel of poverty that's going to keep you there forever. So generally speaking, if you can save on your interest, over 1%, might be worth looking at. But if you have paid, let's say that you are halfway mark on your mortgage, more than likely it's not a good financial deal for you to do so, because you're not going to have enough time to make up for it, and you're going to be spending a whole lot more money. We've already looked at several scenarios, and if you haven't done this, I really encourage you to do this as well. Take your mortgage payment, multiply that times 12. That will get you how much you're spending each year. Now, we're not talking insurance or any of that, but then multiply it times 20, 30 years or whatever mortgage term that you got your mortgage for, and see how much you actually are paying for that mortgage. Most people think, again, because they can afford the payment, they don't even think twice about how much it is that they're paying for that mortgage. So again, we're talking mortgage refinance to pull out equity or whatever you want to do, maybe to get your payment down or whatever. But, right now you're looking at 7% interest, and it probably doesn't make sense for anybody out there that would be listening to this to try and refinance, because generally speaking, you probably have a lot smaller interest rate than what you can get right now. However, there is some funny math going on that some of these mortgage lenders are trying to promote to people. And one thing that I want you to really steer clear of, and that would be when those adjustable rate mortgages. A lot of people, they're trying to get you in a house with an adjustable rate, thinking and telling everybody that rate is going to go down. And there's no guarantees of that, of course. And so you could be stuck. What if it went up? Then you'd really be hurting financially. So anyways, don't fall for any of those tricks, y'all. Just really think hard and heavy before you decide that you want to refinance. Does this make financial sense? I know, when you're trying to get yourself out of debt and you're feeling strangled by your credit card debt and all of that unsecured debt, it really seems like it might be a logical, good financial sense for you to do that. but many times it doesn't. Again, just a quick little note today, just a general rule of thumb. If you can save over 1% or more and you still owe quite a bit on your mortgage, like if it's a 20-year mortgage and you've only maybe paid 2 years on it or something like that, it might be worth it. But again, have somebody that knows what they're doing to run those numbers for you. And it's not just the payment, it's over time, how much will you have paid, because after all, you're trying to build equity as quick as possible. And if every couple of years you're in there trying to refinance your mortgage, that high percentage is going to interest and not your principal payment. So if you keep doing that, you're never going to be able to chip away at your principal. That means the amount that you actually borrowed, you're just paying the interest rate. So you got to really be careful with that. There are some other alternatives that I'll be talking to you a little bit later on that probably is a lot better solution for you if that's something that you want to explore. So anyways, I'm going to hop off here. Again, just wanted to talk about, is refinance ever a good option for folks, and when that might be the case. So I hope y'all have a fabulous day. Hope you're enjoying this 4th of July week, and I'll talk to y'all soon.